We're at the FundForum Asia 2015 in Hong Kong, and I'm here with Martin Gilbert, who's the founder and CEO of Aberdeen Asset Management. And to kick off, maybe you could just give me a view on, where do you see the global economy going? We've got so many different moving parts and different challenges, be it US, Europe, Japan, China. Give us a nugget sort of, insight on what you think are the biggest challenges and opportunities.
I think it's very difficult to find value anywhere, probably, except emerging markets and probably especially Asia. The US looks pretty highly priced. We're seeing another $1 trillion projected of buybacks this year in US stocks. European stocks are being buoyed by liquidity being injected into the system. There's renewed interest in Japan because people think it's doing well, but still emerging markets are out of favor and therefore probably offer the best value. Bonds look fairly pricey throughout the world, again with the exception of emerging markets. But again, opportunities I think in Asia and emerging markets.
Mm-hmm, mm-hmm. Despite the fact, there's certainly some worry that rising interest rates in the US ultimately could put a dampener on emerging markets rather than helping lift them. How do you square that?
Well, I think that the rising interest rate scenario is the main worry for regulators globally, and they're concentrating on what happens to bonds, especially bond funds, daily liquidity bond funds. So I think that's where we should see the real probably danger. I can't see that interest rates rising are going to really affect emerging markets hugely because they've lived with higher interest rates than this for all the time I've been in investment management, so I don't see that really as a big issue. I see the oil cut as having helped emerging markets as well. So I'm reasonably positive on them because I think the companies are doing pretty well throughout, as I say, Asia and emerging markets.
And as you say, you've been in asset management for 3 decades plus.
Yeah.
Give us your insights. What are the main pieces of advice you'd give to someone, especially in this complex environment?
Yeah, I think you just got to be very wary of where you're putting your money at the moment. Really understand what you're investing in, because in times of liquidity like this or excess liquidity, the danger is you just buy indiscriminately and forget your discipline. So that's what we try and do, is just remain disciplined throughout all this and not lose our focus.
And do your due diligence in terms of specific companies, sectors and geographies?
Yeah, absolutely. We're a bottom-up fund manager, and it's been owning high-quality stocks. So it's been quite a painful period for us because, as I say, when liquidity drives markets rather than fundamentals, danger looms. So you've got to be very careful what you're buying, rather than just buy indiscriminately.
Great. Well, thank you very much.
Thank you.